大家好，这里是听广播学英语频道。最近黄金价格是越来越高，创纪录的黄金价格能闪耀多久？今天我们就来听这个话题。这段播客讨论了黄金价格最近飙升的原因，包括货币宽松政策、地缘政治紧张局势以及央行购买黄金等因素。它探讨了潜在风险，并提出了一些投资策略，以捕捉黄金上涨的机会。好了，我们开始听广播吧。
This is a podcast from BFM 89.9, the business station.
Thanks for staying tuned. It's 7:36. It's Tuesday. But in the meantime, let's shift our attention to gold. Because gold, amazing, is up 13.4% on a year-to-date basis. It hit a record high of US $2,354 per ounce, underscoring its appeal as a stable investment option.
Global interest rate cuts by central banks, coupled with potential Federal Reserve rate adjustments, have also caused most currencies to depreciate, except for the King dollar at this juncture. In the meantime, there has been this trend by central banks bolstering their gold reserves, recognizing the precious metal's role as a hedge against currency devaluation. But with gold at record highs, is there still upside, and what are those catalysts? Is it still going to shine?
I think, it's really shining at the moment. For some insights into an outlook for gold, we speak to Christopher Wong, FX strategist at OCBC Bank. Good morning, Chris. Thank you so much for joining us. Now, firstly, could you interpret for us the current bullish momentum in the gold market? What's causing this?
Yeah, indeed, you're right. Gold has quite a blistering run. It's up 13% since the start of the year. It has outperformed the S&P 500. It's up 18% one way since the middle of February this year, and may still potentially have further room to run in the medium term. Some of these drivers, like you mentioned earlier, that is underpinning some of this rise in gold prices includes the prospects of global monetary easing, and of course, central banks purchase on a very sustained basis of gold and geopolitical concerns. To some extent, I think some of this FOMO momentum buying has also likely contributed to the rise in gold prices. And if we consider the prospects of global monetary easing, several central banks in the Latin America region, including Brazil, Mexico, Paraguay, have already started their respective rate cut cycle. And then in the DM world, the Swiss National Bank became the first central bank to cut rates in March, while most DM central banks, including the likes of European Central Bank, the Bank of England, the Bank of Canada, and the Fed, are likely to cut rates in the coming months as inflation has peaked and looks on track to return to target.
Okay, but can you help me understand what's happening with the typical correlations gold has with interest rates? Because if we are heading for a rate cut, shouldn't gold also come down? At least that's what history tells us. Or am I wrong?
Well, if the rate cuts were to happen, then technically speaking, we should see gold prices appreciate to some extent, because the opportunity cost of holding gold becomes a bit lower as that goes by.
Okay, and then what about the US dollar and gold though?
Yeah, the US dollar and gold has a very interesting relationship. Historically speaking, the US dollar and gold are inversely correlated. But if you look at this year itself, there has been a bit of appreciation in both the dollar and the gold. So this is kind of interesting because we have come to a point where the rate hikes cycle previously has already ended. For the Fed, it has ended in July last year. And we have been in a situation where the rates are on pause for really much an extended period. So on that note, the expectation now is that the next move is going to be a cut. So that kind of fuel, the rise in multiple asset classes. So there is a little breakdown in the correlation. So you're seeing silver, you're seeing gold, you're seeing S&P 500 rising across the board, even with the dollar as well. So this is not something that is too rare. In fact, if we look at the past cycles, where Fed, basically are on hold after their respective rate hike cycles back in 2004 to 2006, that's where the rate hike cycle ended, and then subsequently after the 2018 rate hike cycle, and then of course the current rate hike cycle that ended in July. we tend to see gold, silver, S&P 500 kind of appreciating like together, but of course in different magnitudes.
Chris, well, we're on the topic of correlation as well. Do you see some correlation between gold and cryptocurrencies? Because that's kind of what I've been reading in several opinion pieces.
Yeah, I mean, if you were to look at isolated windows, the rise in March and gold prices in particular, you actually see bitcoins or cryptocurrencies rising in tandem with gold as well. And they tend to link it together with whether this is debasement or de-dollarization down the road. I think to some extent there seems to be a little bit of a merit because it can't be the case where coincidence happen all the time. But if we were to look a bit clearer, I think the historical relationship of the dollar and the typical characteristics of the dollar, or rather the gold itself, I think that it's still unique to gold. And I think gold is being more of a fundamental, it has a bit more of a fundamental driver than the crypto itself.
And how much of the central bank buying that we're seeing around the world, particularly China, the 17-month of continuous buying, actually impact gold prices, especially if we look at this in a longer term?
Yes, I think you're right. If you look back at history, central banks around the world have become net buyers of gold post the GFC in 2009. And central banks now hold more than 35,000 metric tons of the metal. So what does that mean? That's almost a fifth of all the gold ever mined. So 2022 was a record year where most global central banks purchased an estimated 1,082 metric tons of gold. 2023 was the second largest year as well. And then, you mentioned about China has been adding gold to its reserve for 17 consecutive months. So sustained demand from global central banks, including China, India, Turkey, as a means to diversify their reserve, especially in the face of today's increasing economic and geopolitical risk environment. This will continue to drive up these prices of gold in the medium term.
Chris, I'm also old enough to remember that geopolitical tensions seem to drive the value of gold because when Iraq invaded Kuwait, gold shot up 4-5% in one day. Do you still see that happening today? I mean, we've got the US presidential elections coming up. What's happening in Russia and Ukraine as well as Gaza?
Yeah, so gold has these unique characteristics, such as being a safe haven, a portfolio diversifier. Historically, it has low correlation with other asset classes. So the appeal of gold tends to rise when geopolitical tensions rise. Investor wants to seek gold as a hedge against economic instability and geopolitical uncertainty. So to some extent, we observe that the gold's rapid rise in March was also partially driven by the potential implications that may arise from the US presidential elections in November 2024. And if you can recall that it was the first half of March that former President Trump has basically won the Republican nomination. So the potential implication is that Trump may start a new round of trade war on China if he becomes president again for the second term. And he has, recently spoke about plans of imposing tariffs of 60% or higher on China. And if we recall again back in 2018-19, when the US-China trade war started and escalated, gold prices rose pretty significantly. I think it was in the round of about 30% or so. And the macroeconomic landscape then was also one where there were hopes of policy easing before the actual rate cut cycle began in the third quarter of 2019. So apart from all this US-China trade war risk, the armed conflicts in Russia-Ukraine, as well as the Israel-Hamas situation, further added to this geopolitical uncertainty.
Chris, what could bring down gold prices though?
Well, I think if we do get an extended pushback in terms of the timeline for first cut, or if we do get a quantum of cut that is much lesser than expected, or even in a rare environment, I wouldn't say rare, but perhaps in that low probability environment that Fed returns to raising rates, then I think this gold's allure or appeal will be affected. If we also have a scenario of a sharp wind down in geopolitical tensions, then of course the demand for gold will also be affected to some extent.
What are the limitations to investing in gold? Is it mainly a question of storage or that it provides no dividends?
Yeah, so these days, I think one, can gain exposure via a range of products, including like listed gold ETFs or buying even physical bullions. But like you mentioned, transaction costs, holding costs. So the opportunity cost comes into play. So for instance, if you were to own gold, it pays zero interest rate as opposed to if you were to hold your asset classes in, say, dividend yielding asset classes or say bonds that pays dividend yield. So, that's the opportunity cost. So that will be one limitation that will be for investors to consider.
And how do you then recommend investors to position themselves in the gold market? Are there any specific investment strategies you're going to suggest to capitalize on this potential upside while, of course, mitigating potential risks?
I think there are various ways. I think listed gold ETFs is one. And then, of course, buying your physical bullion from trusted sources, which is very important. That's I think, the most important line that I want to mention, trusted sources. Yes, because we do hear there are some issues or, whether the gold quality has come into question. I think that will affect your holdings.
All right. Thank you very much for your time. That was Christopher Wong, FX strategist at OCBC Bank, telling us that it looks like gold will continue to rally. The conditions are there in terms of the geopolitical tensions. US dollar strength is the odd thing because it normally is negatively correlated, but it looks like markets just don't care. In fact, almost every asset class is doing well at this moment. I'm confused.
I remember just a few months back when we were looking at it, was we were just talking about it, whether or not it can cross that $2,000 level. And when it did, I felt a little bit uncomfortable, and I was asking questions about, where it's going to go. And look at it now, $2,300.
Yeah, that's where it went. And I think what's interesting to me is central banks actually increasingly buying gold. And I'm wondering whether this is because they anticipate that at one point in time, the US dollar, which is normally part of their reserves, is going to depreciate, partially because US dollar debt looks untenable, right? If you look at the percentage of it to GDP. So are they just preparing to have a more diversified reserve? Especially, like he says, this all started way back during the great financial crisis in 2008. But interesting times for sure. Up next, we're going to be exploring the consequence of the container ship coalition in Baltimore's bridge. Stay tuned for that, BFM 89.9.
You have been listening to a podcast from BFM 89.9, the business station.